Equity News and Equity Access, your daily insight of stock market developments and of developments in the Zimbabwean economy. A fantastic evening it is to you. Thank you for joining us as we broadcast from our Hampton studios in Harare. I'm Ibn Mabunda. Let's get on to business. The Postal and Telecommunications Regulatory Authority of Zimbabwe, POTRAZ, today released a consumer satisfaction survey report which covered various aspects of the telecoms industry. According to the report, data service usage increased by 5 percentage points from 29% in 2015 to 34% in 2018 for household consumers, while for corporates there has been a 3 percentage points increase from 83% in 2015 to 86% in 2018. Our Equity Access team was on the ground as the report was being issued. Let's have a look.
Then coming on to our mobile network operators, in terms of usage, this is one of the most engaged segment in the market, where we have 93% of our household consumers saying that they use mobile telephone services. Then 72% of our corporates using our mobile telephone services. And even if you look at it across the region, the segment is being engaged.
The survey also revealed the level of mobile penetration in Zimbabwe that is actually prevalent at the moment. Again, our team was on the ground. Let's have a look.
Then in terms of internet, which is one of the most exciting categories in the sector, people are really excited about internet. And going through different areas, evaluating in terms of penetration, this is one of the industries that are growing significantly. And if you look at it, 34% at national level for our household consumers, which was actually an increase from 29% recorded in 2015. So consumers are really excited. And if you look at even our corporate consumers, from 83% to 86%. So our corporate consumers are engaging the internet services more compared to our household consumers. And even in the rural areas, we have 22% of the people now being able to access internet, and 50% in the urban areas.
Elsewhere, following a cabinet sitting, the Minister of Information and Publicity, Honorable Monica Mutsvangwa, issued a statement addressing key economic issues relating to the nation. She highlighted that government would cushion farmers and key sectors would be cushioned from the existing load shedding. She also indicated that President Mnangagwa is set to launch the tripartite negotiating bill, which was passed in Parliament on the 23rd of May 2019, which is meant to involve private sector and address price increases. Let's have a look.
On the electricity front, the Minister informed Cabinet that strategies to cushion farmers and other critical economic entities from the ongoing drought-induced load shedding. That is as far as the fuel and energy supply is concerned. Then on the current price hikes, Cabinet notes with concern the continuing price increases, which are eroding the value of incomes for the workers and inflicting a lot of suffering among all our consumers. It is in this regard that Cabinet welcomes the passing of the Tripartite Negotiating Forum Bill by Parliament on the 23rd of May 2019. This vital piece of legislation is now set to be launched tomorrow by His Excellency Comrade E.D. Mnangagwa tomorrow morning. This, together with other measures already being pursued by government, will go a very long way in bringing stability to the issues of prices through broad stakeholder collaboration in turning around this economy.
Tonga Hewlett, the country's largest sugar producer, has increased the price of sugar by 97%. This comes in the face of increased cost of production as inflation soars. Inflation was recorded at over 75% for April and at 66.8% for the month of March 2019. This comes several days after the Zimbabwe Sugar Association expressed that the country has sufficient sugar levels to meet the nation's demand. Now let's just have a quick look at the presser that was issued by Tonga. So this here is the price of a 2 kg packet of sugar in white, which is now actually $10.44. Previously, the price was $5.29. So there has been actually a 97% with regards to the price of the sugar. Elsewhere, Delta issued a statement expressing improved liquidity on the interbank market. As a result, they have adjusted the prices of some of their product. Now, this is a statement that they have actually issued. It says, following the improvement of foreign currency availability on the interbank market for ongoing operations, we are pleased to offer all our returnable glass packs in RTGS dollars with immediate effect. This policy position applies to both beer and soft drinks. In other news, South African economy declined by 3.2% in the first quarter of 2019 compared with the fourth quarter of 2018. This is according to stats released by Stats South Africa. This was mainly driven by declines in the country's manufacturing and mining sectors. This is said to be the largest quarterly drop in about 10 years. South Africa is Zimbabwe's largest trading partner. Still, this would be a graphical presentation of how things have actually played out in South Africa, moving right up to this point. So there has been that very negative performance in the last quarter of in the first quarter of 2019 against the last quarter of the year 2018. Meanwhile, Standard Bank Group in South Africa is set to shut down 104 centers across South Africa. This is an increase from the pre-stated figure of just 91 branches. This is in line with the bank's move toward digitalization. This will result in a loss of jobs of over 700 employees across the country. Standard Bank has a Zimbabwean unit operating as Stanbic. This concludes our evening news bulletin. Up next is a news review. Don't go anywhere. Welcome back, viewers. It's time for news review, and with me for an interesting discussion is our very own chief analyst, Respect Gwenzi. Respect, good evening and welcome to the show.
It's always my pleasure, Imbe.
Fantastic. Now let's get the ball rolling.
Sure.
Cabinet has just had its seating, and the Honorable Minister of Information and Publicity, Minister Mchangwa, comes out and says, among other issues, firstly, that government will not be able to run through with several of its projects, including the dualization of the Harare-Bulawayo Road, as well as several other projects that were actually online for completion by government. What is your assessment of the situation at play here?
I think these are things that we, as Equity Access, we had already projected. We had quite assumed in terms of the budgeted expenditure, which had initially been targeted at 8 billion. But then when you look at what prices have, how prices have risen over the past few months, you could clearly see that it was no longer tenable for government to achieve its targets, especially in infrastructure projects. So I think she mentioned quite a number of projects across different sectors. Right. Obviously, they're due to different ministries as well. But these have not come to fruition simply by the very fact that government can no longer afford to pay an equivalent amount. So if you budgeted $8 for a certain project and the prices have now risen by about 3 times, it means you now have to pay 3 more times in a constant currency terms. So most of the prices have gone up across industry, and that's a big deal. Why is it a big deal? Because if government chooses to push on with some of those projects, it means they have to have an additional budget, and this is one of the strategies that this is one of the moves that the Minister of Finance is going to obviously introduce in the second half of the period when he revises his initial 2019 budget. We're seeing a growth in terms of expenditure from an initial budgeted expenditure of about 8 billion to something now close to at least 12 billion thereabout. So with that kind of budget, you really expect most of these expenditure lines to be increased in line with the growth in prices. But by implication, it also increases our deficit position as an economy. I think that's one of the danger. We have to keep on checking in terms of our deficit position, how much we tend to lose.
I realize. Now talk about another statement that she said that government would cushion farmers as well as certain key players in the manufacturing sector to try and cushion them against the existing load shedding in the economy.
Yeah, obviously it's one of those key factors, one to do with power, but I think there are a lot of initiatives that are undergoing in several businesses who are undertaking to import their own electricity. Some are even finding alternatives through solar energy and similar projects, or buying power from independent producers. I'm sure there are quite a number of guys that are moving with that initiative. So basically, that has got an implication as well. If there are sustained power cuts, there's obviously an opportunity cost loss in terms of our production, expected production levels.
I realize, but also still in the same vein, she also indicated the fact that tomorrow President Idi Mnangagwa will be launching what has been called the tripartite negotiating bill. What is the significance of that bill in light of developments in the economy?
I think it increases participation from all the involved players in the economy. A tripartite negotiating forum is where you're bringing in different parties. The employer, in this case, maybe being government. That's in terms of the civil service. You also have workers' representatives and maybe even the private sector as well. So whenever there are issues to do with outstanding or disagreements, especially to do with pays, salaries, and also to do with prices, there has to be obviously an engagement of sort within the TPF, the tripartite negotiating the forum. So I think it's a welcome development to the economy. It increases the discourse of cross-pollination, and obviously it also enhances productivity as well, because there's easy engagement and also there are easy decisions that are made within that forum.
I realize. Now, in an interesting development, Delta here says for the returnable glass packs, they'll now be selling in RTGS dollars. Quite an interesting shift, and the main reason that they've highlighted there is due to the improvement of foreign currency availability.
Yeah, I think these are, it represents some of the things that are happening in terms of the interbank market. We saw a relaxation of government's hand on the market about 2 weeks ago, and there's been improved flows since then. But much of the flows have also been coming from the drawdown, the 500 million drawdown. And so obviously Delta, as one of the biggest players in the market, has also been enjoying that improved liquidity, and they also have a muscle as well. So obviously they could bargain, and they could obviously move ahead of other demand peers as well. So I think these are some of the developments that have resulted in improved flows. But I think when we want to look at it holistically to see how sustainable this move is, I think it's mainly a PR kind of a statement, if so to say. Why? Because you cannot base a long-term decision based on what has happened over the past 2 weeks. There is obviously a talk that the market is still fluctuating. It is yet to find an equilibrium. So what that means is we don't know yet where the market might settle. And therefore, if you tend to price your product based on what has happened over the past 2 weeks, what if the flows just start drying up? It means you have to go back to that pricing model where you're saying the guys who buy or retailers who come and buy, so they should bring part of their payments in Forex as well. Yep. So you cannot move within 2 weeks to conclude that there is sustainability in terms of flows on the interbank market. I think this is the gesture which Delta, as a big player, wants to communicate to the market to say, guys, we need to be confident with this interbank market, and we are sending a gesture. We are playing our hands in terms of that move. But I don't think that fundamentally it reflects the sustainability of flows on the interbank market. Why? Because at the present moment, government is still putting caps to the interbank, and there's also been drawdowns coming from that other facility, and that's not truly reflective of what exporters are putting on the ground.
I realize, but could this be perhaps also, on the other hand, the influence of the competitor? With Pepsi, we've scaled up their production. Could it be maybe it's a bit too closed down on the competition there?
Returnable glasses are across the portfolio. You find them in sparkling beverages. You also find them in lager beers as well. So when you look at lager beers, which is the mainstay of Delta, it's devoid of competition from peers such as the Pepsi guys. So I don't think this decision is really influenced by the increased competition, because either way, if you're taking money on the interbank, you still have to input it in terms of your cost, and you have to adjust your cost in local money terms relative to what you would have been charged on the interbank. So at the end of the day, it remains that your price will have to reflect the true picture on the ground. So that's what I think. I don't think it's a decision that has been forced on Delta by peers. I think it's much to do with the clout. It's much to do with the positioning. Delta knows that we are strategically positioned. We are the key market leaders, and once we say something, definitely part of the industry can also tap into it as well. But I don't think it's a statement that is driven by fundamentals, and I also don't think it augurs well with their business, because 2 months down the line, flows might start to come off on the interbank market, and Delta will have to find alternatives as well to cover in that gap, which gets us back to that 2018 and 2017 cycle.
Fantastic. Now on to South Africa, which is our largest trading partner. In the first quarter of 2019, they recorded a 3.2% decline in terms of the GDP compared to their performance in the fourth quarter of 2018. How important is that where Zimbabwe is concerned, or what has brought us to this place, as well as the significance thereof where Zimbabwe is concerned?
South Africa has continued to struggle, especially in the past few years. This is largely to do with fluctuating commodity prices. This is a predominantly commodity-driven economy, and also production has been coming off lately in 2017 and 2018. But much of the things to do with issues to do with currencies, it has been influenced by negative perception, especially of the Zuma-led government, which was there before the current government. And so, obviously, there has been some serious issues in terms of production, which reflects how GDP has now evolved to be coming off in successive periods. It only halted this decline just the quarter before the quarter that is recorded in the current scenario. But I think what really concerns us as Zimbabwe is that whenever South Africa is not stable as an economy, obviously it reflects in terms of prices as well on the Zim market. We are a consumer of SA goods. We import over 50 to 60% of our consumables from SA, and that really means a lot to us. If prices in SA are going up, then it also means that we are about to import inflation as well. And if production goes up in SA, it also pushes up it pushes up prices in a way. Why? Because demand will still remain high from the region and within SA, but with supply being low. So obviously it's a worrisome development, and there's also been talk about joining the Rand Monetary Union as well. Obviously all these things are brought to light again to quiz how feasible it is and how economic it is for us to make those moves. But aggregately, I believe that the problems in South Africa can be sorted by some of the initiatives or some of the policies that the government of South Africa is now trying to undertake.
Now, Chris, and then also along with what's happening globally, could the trade war be having an impact or a reflection or a knock-on effect in terms of South Africa? I mean, there's been talk of how, of course, global markets have responded and how it is affecting emerging economies. Could we, as yet, speak about the impact of the trade war in South Africa?
I think as a resource economy, and given the background that one of the key buyers of mineral over the past few years has been China. Now that there's been this trade war, obviously China has to be tactical, and they have to forego other of their purchases across the world, I mean in terms of trade. And so it remains to really be seen whether there could be a serious impact. But I think to get a proper view, we need to dissect the nature of trade between the two economies, and also the nature of trade between South Africa and USA. And that's where we can try to then project and see what could be the opportunities and what could be the losses. But as far as it stands, I think South Africa is basically a resource economy, a resource-driven economy, and much of what happens to the economy is it reflects prices in the movement of precious commodities such as gold and platinum.
I realize. Well, thank you, Respect, for the perspectives. Thank you guys for staying with us. Up next is a look at the stock markets. Please stay tuned.
Good evening, ladies and gentlemen. Welcome to Markets Daily on Equity Access. My name is Alex Chimbungu, and joining me today here is Respect Gwenzi, one of our chief analysts. Respect, how are you doing?
I'm doing just fine. And so, how are you today?
Good, thanks.
Nice.
Let's just jump in straight into the market today. The market did extend on its prior session gains, coming up 0.53% for the all-share index, while the top 10 index added 0.61%, showing some movement there, mainly because of a Padenga jump there, about 18.17%.
That's quite huge.
Yes, and the industrials index in the middle there, coming up 0.54% for it to settle at 634.02.
Most of the key stocks coming off today, so Econet, Cassava, Citco, and Old Mutual all easing today. I think for Econet, it's now a second day running in losses. And I think for Cassava, I think it's actually for Cassava, which was down in yesterday's session, but for Econet it was up yesterday. But for perspective, let's try to zoom in terms of our daily gains there. 0.53 yesterday, we're talking of an average gain of 0.3, and we said this is in line with market averages. So as long as there is a growth the growth momentum is gaining pace, that reflects sentiment to me. Yes. And we are already sitting at a week to date of almost 1% thereabout across all the major indices. I think that really shows you the kind of momentum that is present in the market. And when you look at how Padenga traded today, up a huge 18.17 points, I think that also speaks to the kind of investment that investors are now moving into. They're trying to move in forex generating counters. And these obviously they actually protect value. If you look at Padenga, they're into the exporting of crocodile skin, and obviously they've been one of those counters which have been phenomenal, up 129% on a year-to-date basis.
Okay. Now, just interestingly, yes, Delta didn't have any movements today, but then they did mention today that the interbank has had some good favor on their part. But if we then go and zoom in when we then look at the interbank market there, we will realize that there has been a sustained ceiling movement by that market, only up until maybe end of last week into this week. There hasn't been much of a ceiling movement happening. Yes, but I think where do you think Delta is really going to be going?
I think what's critical and what we're not really getting on the dot is the amount of flows that are moving on the interbank market. If we're able to get the exact values on a day-on-day basis, I think the latest figures that we have point to the fact that in the first 6 days of trading, since relaxation of the market last week, were about 40 million exchanged hands within those 6 days, which would give us an average of about 8 million thereabout. But I think ever since then to date, we haven't really got up-to-date numbers in terms of how much has been crossed on that market. I think that would give us a more a clear picture in terms of what Delta is saying. Why? Because there's an appreciation that generally most of the private sector who are generators of the forex have not been forthcoming in terms of releasing part of their monies on the interbank, and that has got an impact of dampening supply. And when supply is dampened, given the demand levels that are there, we are sitting at a backlog in terms of foreign payments upwards of 500 million, and there are day-to-day demands in terms of forex for companies who want to buy inputs, and also those who are settling debts as well. So there's definitely some huge demand backlog that we have to clear first. So we are likely to see that sustained push or gain in prices, and there's also a lack of confidence in the market as well. All those factors militate against stabilization of that interbank market. And so for Delta to come in today and say we have reverted to
RTGS price for the
for the returnable glasses, I think to me it's not something as much positive. Why? Because the interbank market has not yet stabilized. We might get into a position where we start to see a slowdown in terms of the values of monies that are moving on that market, and you have to revert back again to the old system where Delta was saying, you should give us the allowance to charge in USD. And I think 2 weeks is too small a time to really conclude that there have been increased flows on the interbank. Some of the players, I think Musisa Moyo, the CEO of URI, also came out today and said, as for us, we haven't really seen as much flows. Yeah, of course, flows have been improving, but I think what's more important is stability and sustainability. And those are the two things that we cannot conclude in terms of 2 weeks of trading. And I think it's also true to those who are on the analysis side to say, if you're looking at a market and there's been a movement as much as what has been happening over the past 2 weeks, could we generally say that the RTGS dollar is likely to be fetching for prices that are exorbitant, close to 10 or beyond? I think we're still in that fluctuating phase where we can only but study, and then we can move into a point where the market has cleared the backlog, and we can really see in terms of demand and supply the way the market can stabilize. So I think it's premature for Delta to have come to that conclusion.
Just interject you there. Maybe just an instigative thought.
Sure.
We did realize that end of last year, beginning of this year, Delta did really threaten as to cutting out production because of foreign currency issues. And then they had to have a sit down with the government, where the government then said, we'll end over in terms of making sure that you guys get the foreign currency requirement that you need. Now, would the liquidity that they are enjoying currently could be as a result of that agreement or that relationship between them and the government?
Back then it was on a 1:1 basis. That was how the agreement was consummated. That no longer suffices today. The market is now purely liberalized. Okay. Every player who is coming into the market has to pay in order to get something, and they have to pay an interbank rate. So Delta is no longer receiving subsidies like any other player. They're now buying on the market. So there's no longer government's assistance in terms of seeing to it that there's consummation on site. But I think this is just a matter of goodwill. Delta is the biggest player in the beverage space. And in fact, it's one of the biggest companies in this economy, accounting for more than 70% of the overall beverages, either sparkling or alcoholic. And they have a serious clout, and they also drive the consumer market as well. So once they come out and say a statement, definitely all other small players are likely to follow suit. So they are an influencer in the space of business. So I feel that this is a gesture which has been extended by Delta to say, let's give the interbank market a goodwill. Let's put in a word, just for the market to have confidence on the interbank and so forth, as a gesture by industry to say we should accept that government has played its part. I don't really believe it reflects their own fundamentals and it reflects their own rationale in terms of where they see the market going in terms of the interbank.
Okay, interesting. Maybe they want to fight some competition against Pepsi. I wouldn't want you to do
I think we looked into that in an earlier discussion. Okay. I don't believe that decision influenced by competition.
All right. High base effect has caused for a 5-day trend to show a little bit of weakness for three of our major indices.
Sure, I agree.
All share index is down 8.89%. Industrials is down 0.98%, while the top 10 is down 3.14%, and the mining's index is enjoying a strong 5.69%. Now, NTA's Power Speed and Day Report led a pack of about 8 bulls there in our stock market, while Citco International Limited was the leader of 9 laggards. Between them, they constitute about 17 counters that were on either side of the stick, with leaving about 5 counters that traded pretty much on a stable basis. Now, NTS did add about 20.11%, Power Speed 20%, Day Report 19.63%. Citco, on the other hand, dual listed, secondary listing here in Zimbabwe, but primary listing in Botswana on the Botswana Stock Exchange, settled at 151.00 cents after letting go 8.48 cents. Can you give me a little bit of perspective of how that operation has been performing, if you have any more insights around that?
So Citco INT, it is a spin-off from the Zimbabwe unit, but now they've gone regional. They've got a primary listing on the Botswana Stock Exchange, and this is it houses all the regional operations that used to be subsidiaries of Citco Zimbabwe. So they're now under one board called Citco INT, and they're present in several African countries, including Zambia, Kenya, and so forth and so forth. But basically, I think in terms of growth prospect, this is a company which is really placed in a right position. When you look at seed sales, I think one of the staples for Africa, all African economies, it's mainly maize, and they're present in those countries. And they've also had some huge shareholder support from Lima Grain, and so I think they're on a good launch pad for growth. And when you look at the price issues to do in Zim, there's been obviously that movement towards stocks with a bit of diversified from the Zim market, and it has enjoyed a very good run. So some of this is merely it's merely profit taking, yes. And obviously it is not a sustainable downward trajectory. But I think I would love to talk more about Deribot. Almost hitting the ceiling there, rising by 19.63. But generally, when you look at the structure of today's risers, it's made up mainly of mid-tier stocks. Yes. It just shows you whenever there is a growth on the stock market, it starts from the heavy caps, then it cascades down to other counters. And when you look at the nature of today's risers, these are mainly mid-tier to small cap counters. Deribot rising 19.63 to 19.2 cents. That's a phenomenal growth, and it's coming just after the company had its AGM, where they announced strong growth numbers for their 5 months period, and that's something that is definitely phenomenal. Volumes growing over 8%, and revenue growth is actually in double digit. I think that really shows you brand strength and also the nature of residual demand. And also I think it reflects a bit of market share, defending of market share in a period where aggregate demand is reported to be coming off. So I think this is the market rewarding a company which has shown us resilience in the current macroeconomic mess.
All right, I think for Deribot, I would buy and hold for now, because prior to the AGM, they did mention also that they were expecting very strong growth numbers, but then because of all the hullabaloo that we've been facing in the economy, we also then just thought probably they may be a little bit too optimistic now. The first 5 months have shown some strength there. So I'll require for any one of these investors who would want to invest, put their money on Deribot, they could get a good dividend by the end of the year. Padenga and TSL capped the set of 5 risers, while banking stocks, ZB Financial Holding, ZB, CBZ, and NMBZ.
All making up part of today's losers.
Yes,
but if you look at the run that has been enjoyed by CBZ in the current year, it's quite phenomenal. ZB has not been much of a mover this year. In the past year, they really enjoyed some very huge gains, upwards of 200%. But NMB, I don't know why the market might continue to be punishing that stock, but it's sitting at a very firm position on a year-to-date basis as well. But this is a bank that is evolved from, it's now more of a retail bank from servicing a certain niche, which is corporate, mainly driven by corporate banking. And they've introduced some exciting products in the market. They've also even expanded their customer base, usually using the KYC, the KYC light account. So I think this is one of the banks that is obviously worth really looking at going forward. Cassava, they are coming off again. Yesterday, I think the drop was about 0.7 and it's now 0.4. It further comes off just after the announcement of a resignation by Mamondiani from a subsidiary, which is Stewart Bank. But I don't think the current decline has anything to do with his departure. But I think it's worth mentioning that whereas we are expecting the results in a matter of a few weeks, the group's results and the bank-specific results, the bank is obviously going to maintain pole position in terms of non-funded income, and they are also obviously likely to emerge within the top 5 banks in this country, mainly driven by the initiatives on the ICT side, which is what Cassava generally leverages on. And I believe that they will still continue to grow outside of the man who is leaving the platform.
All right, just as you mentioned ICT, I didn't remember, yesterday I did also mention that these guys are very much a pioneer, especially with Stewart Bank. Now NMB recently did mention that they introduced a new product where you would have an NFC card that is going to be allowing you to spend a maximum of about $100, where you may just use it for your small expenditures, be it your bus fare, your tomatoes and the like. And I think that is a move which is very strong for them to actually try and push their non-funded income, because their non-funded income hasn't been very strong compared to other banks in terms of. I think
I agree, but it's mainly because of the nature of their clientele. Just years before 2018. So I think all that is slowly evolving, and it also endears them to customers to be bringing in relaxed accounts, which allows for somebody to borrow and then pay at a later stage. There's no longer such kind of banking in Zimbabwe, so obviously it can bring them more clients as well.
All right. Quickly onto the stock market. Quickly onto the foreign exchange market.
Sure.
Our all mutual implied rate is now at 9.8. Parallel market has weakened again to 7.65, while the short movement there, almost 2%, 0.2% increment has gone to 5.51 from 5.42 yesterday. What are your sentiments? Liquidity has been mentioned by Delta.
I think when you try to look at some of the trends here, we're seeing on the OMIR, which is the old mutual implied rate, we are seeing a price position of that much, but I'm more worried about the difference between these two, and obviously the difference is all here. If you look at periods just before the introduction, the new relaxation of the interbank, there was a slight margin between these two. It used to be a slight margin between the two.
Even around about this area there as
well. Yes, there was a close relationship between the two, and they were not as far off from each other. But as we moved, post the new relaxation of the interbank, we've seen a widening gap between the OMIR and...
I think also for the old mutual implied rate, there has been a decline on the JSE for the past 3 sessions. I think an average of about 1% a day coming off of that stock. Could it be because of the Peter Moyo issue that was announced on Friday?
Obviously, the Peter Moyo issue had a negative effect on the institution. After the announcement, it came off just close to 6%, and it has been down since then. And the average declines have obviously cooled off. But I think it also informs our own interbank. Of course, today it did come off, but the JSE margin was actually worse off, so it implied that there had to be an increased implied rate on the ZIM market side. So I think obviously it's being affected by that on the JSE side, and the ZIM side is not as quick to look at such fundamentals. It's actually looking at the issue to do with hedging and obviously moving away from the RTGS market. But today, obviously, there was a dent in that respective market. So I think generally it remains to be seen where the market goes from here. If you're looking at today's interbank rate of 5.51, it's below the cap, which we have assumed that is around 2 point something, yes, given by the government. So we didn't see much of a movement. It's actually a marginal movement. It might also reflect a lack of liquidity as well. I think it's also, it would be good if government now starts to give us those numbers in terms of the daily trends.
All right, just to round up, I think also the payroll market could have a small effect where salaries are very much constrained. The price is now almost skyrocketing, and it could cause for restrained demand levels that may have caused for that slowdown and increase that gap. Would you think so, or otherwise?
I wouldn't disagree. I think obviously the levels of incomes are quite constrained, and that obviously dampens the ability to play in that other relative market. But then I think the outlook will mainly be shaped by the availability of flows, mainly on the main market. Once there is a clear indication that there are no flows that are moving to the main market, and the parallel market should definitely respond.
All right. Delta enjoys liquidity on the interbank market, yet there are no selling movements as of late. Now, that is from me and the Equity Access team. Respect Tanaka, Eben, and the whole team. Do not forget to like, follow, and subscribe our YouTube, Twitter, Facebook, and Facebook accounts, actually, at Equity Access. Good evening.